now I can see it. Okay, now we're back. All right. What's up, everybody? Good morning. Welcome aboard. Little technical issues this morning, but we're ready to rock and roll. And in the meantime, a lot of Fed speak today, so it could make for a challenging market. I wouldn't expect a hell of a lot to happen before. I think you're seeing the Federal Reserve send out a bunch of test balloons. I think you'll get a different message from each and every person that speaks today. They're trying to figure out what to do, because if you saw Jerome Powell on 60 Minutes, he's an idiot. Okay. I don't know why we have a 2% target. I don't know why we do this. Look, they shouldn't be involved in the first place. The bottom line is that the free market should prices itself. You don't need somebody to tell you what interest rates should be. But in the meantime, as we watch the markets and take a look, we can see that, there's a little bit of selling, but again, there's really not a lot going on. This is extremely quiet. This is very, very mundane, without much action going on and not much to really look at. You look at the S&P, we're just kind of sideways. And notice that the ranges are getting tighter and tighter as we trade, which only suggests that a much bigger move is coming. Now, I would certainly expect to see the NASDAQ make it to 18,000 before it's all said and done. And I think we're very close to an ending here. But I would think they'd see 18,000 in NASDAQ. I think you'll see 5,000 in the S&P. You might see 5,000 today in the S&P. And I think you'll see 40,000 in the Dow before this all ends. But I do think we're getting much closer to the ending. I think that there's a lot of information out there as you look at these charts. Again, we're not going to fight the tape. We're not going to fight the charts. Right now, they're still headed higher. We're still in consolidation. You've got some stocks that are headed lower, some still headed higher. But you look at Apple. Apple is, kind of in a downtrend. But again, it's bounced off the bottoms. We're getting right to the mean, which is what we talk about all the time. Oversold, a bounce back to the mean. Overbought, a sell-off to the mean. Amazon, again, is still very much overbought. Even with a little bit of selling, it's still overbought. Okay. So it means that there's some significant room to come down here as we still watch it. Coin, okay, again, a little bit oversold, not quite dramatically oversold, but a little oversold. Expect a potential rally in this. Again, remember, we went from overbought. Now we're oversold. Meta, again, you're still, even with Meta coming down $30, you're still overbought. Okay. So again, look, I'm not telling you I would go out and sell it now. I did sell it last week. I did sell a call spread. Okay. A deep in the money call spread. But again, it's you get into points where you have to let this market trade now. You're certainly not going to sell something $30 lower into the hole. Google continues to be hovering around and continues to be probably at resistance. IWM continues to test the bottom. Microsoft continues to be in the mid-range. So you're kind of seeing a consistent pattern. Here's one that I actually missed. I didn't get a chance to sell it because I wasn't able to do so this morning. But to me, this was a blow off to the upside and would have been certainly an opportunity to sell if you were paying attention. Unfortunately, I was doing some other things. I missed it. The Qs up towards the upper end of the range. So you're seeing a consistent amount of movement. Again, does it make sense or does it not make sense? It really doesn't matter. Okay. The market is the market. It's an inanimate object that's going to move. I think until we see some real movement, I think we continue with the same tack, which is to look for opportunities to sell premium, whether they be put call spreads or call spreads. Certainly the zero DTEs are the best if you can get them. Now, only the spiders and the Qs have them, but those are the best because it's only one day. You're talking about a trade that lasts for a couple of hours versus now waiting. But again, certainly anything that you can sell for Friday, if you can find some trades that you'd want to sell for Friday, that's what you're looking at. And I think those are the things that we look for as traders, is where can we find an advantage in the market. Okay. And again, the way we find the advantage is by finding markets that are that are priced either too high or too low based on the mathematical indicator we use for here right now, which is the Bollinger Band. Again, when you have nothing going on, okay, you need to have a reason to act, okay. And maybe I can give you an example. If you're a sports fan or you're a gambler, you have the Super Bowl on Sunday coming up, okay. You have Brock Purdy, who doesn't throw for 30 times a game, okay, as a rule. And I don't know that he's done it at all even this year. Yet you have a prop that is priced at 31.5. So that's almost like an automatic under. It's like almost like an overbought situation that tells you got to sell it. I mean, if the guy doesn't throw for that many ever, why would this be different? Okay. So again, you have to look for an edge in the market when you're looking at it. And again, if we look, okay, like right now in the Qs, do I have an edge? No, not really. I mean, certainly the edge would be to sell call spreads versus put spreads, but is it worth getting involved in? Okay, because now you're more of a 50-50 shot. Okay, the SPY, is there a reason? SPY is much better and certainly a much better sell. Okay, if you're going to make a trade there. Okay, again, if we go back and relook at our list in general, Apple, you're dead at the mean. There's really nothing to do right here. It could go either way. Okay, Amazon, certainly if you want to sell some call spreads, very reasonable, very realistic trade. Coin, you want to sell some put spreads, very, very realistic, higher probability. Again, I'm giving you trades that are higher probability. Okay. Now, again, we're not talking about that 90% bullshit. We're talking about trades that are going to give you a higher probability of success. You have to get more credit, though. Don't be selling those 90% probability crap because you're not going to be able to come out. You'll get hammered one day. You want to sell something where you're collecting 40 cents per dollar. You still want to get 40% when you're collecting premium. Okay. So coin would certainly be potentially put spreads. Meta, even though it's over, but I would just stay away from it. I think that's just too much back. Google, right at the mean, nothing to do. GLD, right at the mean, nothing really to do. IWM, maybe you want to sell some put spreads here. That would be reasonable. Microsoft, really not much to do. NVIDIA, again, you can still probably sell some call spreads up here, would be realistic. The Qs we talked about, there's really not much to do. Square, dead middle, nothing to do. SPY, we said we'd sell some call spreads. Tesla, where's my stuff? Why is it? Oh, there we go. Tesla might want to sell some put spreads. Okay. Certainly in Win, you'd want to sell some call spreads. And let's say Zoom, probably want to sell some put spreads. So again, that's really what you'd be looking at. There's not a lot to get overly excited about in the overall framework of this market right now, because it's kind of just whipping around back and forth. So where again, I always have to ask, where is my edge going to come in? How am I going to benefit from the market action that is here? Okay. And so when I look at it, I go, well, there isn't a lot of benefit. So maybe it's a great day to do some homework. Maybe it's a great day to study and let the Fed speak. Okay. Hold on a second. So at the end of the day, we have to be prepared to, also do nothing. Okay. There are times, you don't always have to trade. If you're forcing yourself to always trade, okay, then you're forcing yourself into bad trades, right? There isn't always something to do, and you have to recognize the times, and it's always better to err in not trading than in trading. Okay. It's always better to err to the side of caution. Okay. Especially in the market conditions in which we have right now. Okay. There's a difference between being busy and opportunity and being slow and putting yourself at more risk and in more jeopardy. Okay. And I think that is the story that we have to look at. Is we want to make sure that we're using the tools that are available to us, which is, again, the market themselves is a tool. Okay. And it tells us certain messages based on the way that it moves, based on the charts. Okay. And again, we look at the charts. So if I looked at Zoom, yeah, I could create a potential edge here. But the real question I want to ask myself, is there enough action or enough business here? Okay. Or would I rather pass? Well, let's think about what we got going on today. We've got a lot of Fed speak, which could drive the markets in one way or another. We've got market conditions and volume that is very, very slow. So maybe it's a better day to do some observation, do some studying, do some chart work versus trying to force yourself into positions as the markets are doing not much, right? This is a good time to maybe plan ahead, okay, as you look, okay, into the future and what you're seeing. What are the trends doing? If I go back to Zoom for a minute, okay, and I see in Zoom, okay, it isn't a downtrend, but it is very oversold. It is on extremely light, pathetic volume. So is it really probably worth getting about? Probably not. Okay. Again, the SPY, pretty light volume, right? Yes, maybe I want to sell it. But again, do I really want to sell into what I know is going to be some potential news? Again, whether or not these Fed idiots will be able to create some movement, we don't know. Okay. But at the end of the day, anytime the Fed speaks, it could create a big reaction. Now, it could be in your favor, but again, do I want to get involved in front of those guys? That's what we're looking at. So I think this is where you have to take the time to learn that just because you're trying to become a full-time trader or you are a full-time trader, sometimes you don't trade. Okay. There are times you don't trade because there's just not enough to do. There is not enough advantage for you, the trader. And I think that is something that when you learn that, okay, you will find yourself in a much better position in the future. Okay. Remember, you're not trading for one day. Okay. You're not trading for the moment. You're trading to try to build more money, either in a long-term view, okay, for your investing account, or you're trying to build something for your trading account. You're trying to make a living. Whatever the case is, the story still remains the same as to what you're going to do when it looks to be in a chart. The only difference is when you're trading to make a living, you're trying to day trade, you're going to trade off of a much shorter time frames. Okay. So I think this is something that you have to learn from. And sometimes these days, when you start to look, you go, not much action. So now I'm exposed, okay, to much more risk. Okay. And I think that, at the end of the day, I want to take away the times of when I'm at the greatest amount of risk. Again, we're never going to know for sure. Okay. Again, this is something you always have to remember. I can only give you the theory behind it, because in practicality, I could have the greatest advantage in the world, still have a losing trade. I could have make the worst trade in the world and still make money. But again, successful trading is the ability to repeat the same trade over and over again, knowing that you have the higher probability. It is no different than any other game that you play that you know how to be successful at, that is based on a mathematical picture, that repeating the same process, if you have a 66% edge, okay, and you repeat the same process, that means that you should win 66 out of 100, okay, which means that you're going to continue to bang and make money. But that doesn't mean that there are not losing streaks that come into play, okay? You have to understand that losing is part of the business as well. Every trade we make is not a winning trade, okay? We are talking about the sum total of winning trades. Okay, so we have to get an edge. Okay, for example, in sports betting, the edge is 52.9%. If you can hit 52.9% based on the betting the same on the bankroll, then you're going to make money. Okay, so in trading, the bigger the edge you can get with the determining the risk that you're taking is how you make money over the long run. Okay, and it doesn't matter what you're trading; it still has to be measured risk against the size of your account, and of course, the shorter the time frame you're going to trade, the more active you're going to be. Okay, so you're going to get that number of trades up much faster, but you do need to track what your win rate or your win percentage is, because at the end of the day, if you don't know what it is, then you don't know how to use a lot of tools out there to help you. Okay, and that's, there's a lot of things you can do if you understand what your win rate is, if you can understand what your probability is. If you know that you hit 66% over thousands of trades, okay, or even hundreds of trades, okay, then you could know that if you're in a little bit of a drawdown, you could start to look to add to your position sizing, knowing that you hit 66%, and right now you're hitting 32%. So your market, if you're doing the same work, again, that everything is predicated that you're doing the same thing over and over again. Okay, it's not predicated on you keep changing your mind. It's predicated on doing the same project over and over again. Okay, so if you're trading the phases of the market, or if you're trading the Bollinger Bands, or whatever method you're using, as long as you're trading it exactly the same, and you can establish that win rate, then you know exactly where you are. Okay, and that is the focus that you have to have as a trader. Okay, you have to know all those things so that you're prepared to make the next move. But again, so it's watching your own equity curve. It's gauging the trades that you're making. Okay, and I think that for that, that's what we'll stop on with today, because I'm kind of driving myself crazy with what's going on in with the technology on my own system. So I will see you all on Thursday. Have a great day, everybody, and I hope I have all these things fixed up, because I hate technology to begin with, and this ain't any better. Have a great day, everybody. We'll see you later.